Austria-headquartered AT&S, which manufactures high-end printed circuit boards or PCBs and substrates for semiconductors, will set up a production plant in Malaysia. This will be its first plant in Southeast Asia. According to Bernama, the facility in Kulim High-Tech Park Kedah will produce high-end PCBs and integrated circuit substrates. It will involve a proposed total investment of 8.5 billion ringgit and will create 5,000 high-tech and high-impact jobs. Citing Senior Minister of International Trade and Industry, Datuk Sri Muhammad Azmin Ali, the Newswire said construction is set to begin in the second half of the year, with commercial operations to come on stream in 2024. The project is among the investments attracted by the Malaysian Investment Development Authority or MIDA under the Penjana scheme launched last June. AT&S manufactures components which are used in mobile devices, industrial electronics, automotive applications as well as medical and health technology. It has production facilities in Austria, India, China and South Korea. Loob Holding, the parent company of bubble tea brand Tealive, has sold a strategic stake of 30% to private equity firm Creador. In a joint statement today, both companies expressed confidence the strategic partnership would take Loob to the next level, especially given Creador's track record in aiding in the regional growth of its investee companies. The announcement confirms a report by theedgemarkets.com. The joint statement did not reveal the price of the stake, but according to sources, it was in the 260 million ringgit range. Creador founder and CEO Brahmal Vasudevan said the firm chose Loob to be its first investment in the fast-growing food and beverage sector, as Tealive had grown to be a regional leader with over 650 stores in less than 5 years. Brahmal cited Loob's impressive revenue of 307 million ringgit and net income of 58 million ringgit for FY20, which translates into a 3-year compound annual growth rate of 56% in revenue and 180% in net income. He also noted that the domestic made-to-order tea market has been growing by over 20% in the last few years, and the beverage chain per million population remains under-penetrated compared with peers in the region and developed countries. Meanwhile, Loob founder and CEO Brian Loo welcomed Creador as a strategic investor and partner. He said the timing could not be better, with Tealive's plan to hit the 1,000 store milestone in Malaysia in the next 3 years. In addition to Tealive, Loob's stable includes Kokukai, The Fine Food and Basque Bear Coffee. Analysts expect Igm Corp to pay shareholders a special dividend from proceeds of the group's planned sale of its 56.2% stake in Igm Plantations to Kuala Lumpur Kepong for 1.53 billion ringgit. Hong Leong Investment Bank analyst Jeremy Goh wrote in a note today that the research firm reckons the proposed transaction could result in a special dividend of 21 cents a share from Igm Corp, on top of its 3.8 cent dividend for FY22. He said the expected cumulative dividends from Igm Corp translates into a yield of 13.1%. In his note, he said the research house is assuming a 50% payout ratio on the sale proceeds, though it's possible for Igm Corp to pay out the proceeds over 2 to 3 years. He added that post-sale, the group's earnings profile will be more stable and kept HLIB's buy call with a higher target price of 2 ringgit 29 from 2 ringgit 11 previously. Maybank Investment Bank also expects a special dividend from Igm Corp from the proceeds of the proposed sale. Maybank analyst Wong Chiu-han wrote in a note today the cash proceeds are equivalent to 42 cents per Igm Corp share. She maintained its buy call on Igm Corp shares and raised its target price to 2 ringgit 18 from 1 ringgit 96. Igm Corp's share price rose 2.6% to 1 ringgit 95 today, valuing the group at about 7.05 billion ringgit. Analysts have lowered their earnings forecasts for Glove Corp after its third quarter earnings missed expectations. In a note today, MIDF Research said it was cutting its earnings estimates by 14.9% for the group's FY21 and by 30.9% for FY22. Lower average selling prices aside, the research house said it also expects narrower profit margins in view of the change in the supply-demand dynamics and higher expenses as the glove maker seeks to further boost its environmental, social and governance practices. MIDF sees Top Glove making 9.03 billion ringgit in profit after tax for FY21 and 2.47 billion ringgit for FY22. It maintained its buy call but reduced its target price for the counter to 5 ringgit 73 from 8 ringgit 29. Meanwhile, Hong Leong Investment Bank Research lowered its earnings forecasts for Top Glove by 9% for FY21, 5.6% for FY22 and 3.3% for FY23 after accounting for lower average selling prices. It expects Top Glove to post a profit after tax and minority interests of 9.66 billion ringgit for FY21, 5.04 billion ringgit for FY22 and 2.51 billion ringgit for FY23. It too maintained its buy call on Top Glove while cutting its target price to 6 ringgit 76 from 7 ringgit. Top Glove yesterday announced its third quarter FY21 net profit fell 29% to 2.04 billion ringgit from the immediate preceding quarter, while revenue was down 22.4% at 4.16 billion ringgit. Its shares closed 0.8% lower today at 4 ringgit 80 for a market capitalization of 38.26 billion ringgit. IGB Commercial REIT says its initial public offering will involve the listing of 2.31 billion units on Bursa Malaysia's main market under a corporate exercise which comprises a restricted offering of up to 945 million units and an institutional offering of at least 282 million units. In filings with Bursa today, IGB Commercial REIT, which opened its IPO application today, said the property trust's tentative listing date is July 30th, 2021. The restricted offering comprises up to 378 million units at 1 ringgit each to IGB shareholders on the basis of 2 restricted offer for sale units for every 5 IGB shares held, and a distribution in specie of up to 567 million units on the basis of 3 distribution in specie units for every 2 restricted offer for sale units subscribed. As for the institutional offering, it comprises 282 million units by certain IGB shareholders and an offer for sale of unsubscribed restricted offer for sale units and the corresponding distribution in specie units at a price to be determined by book building. Upon listing, IGB Commercial REIT said it expects to have a market capitalization of 2.31 billion ringgit. It said it will be the 6th largest Malaysian REIT and the largest standalone office REIT by market value, net lettable area and appraised value.